It's Sunday the 17th of July in 2016. This is a chart update for WPG Resources. WPG is a stock that I just bought into in the last couple of weeks on this pullback below sort of 8 cents. I previously owned the stock back in 2011 before their iron ore assets were bought by OneSteel. And that's part of the reason that I really like this company. They've still got the same chairman, who's also the largest shareholder, and he's been a pretty savvy sort of guy. And these are the sort of guys you've got to watch in the small exploration and development sector. After that they did a special dividend and so repaid that all to shareholders. And the company sort of existed for a few years doing not much. And then in late 2013, early 2014, they started buying up some gold assets that were really sort of no one wanted them. They got them at the absolute bottom of the market. So they're an early mover in that regard. And that's since they did that, I started following them again, but I hadn't bought any. But just recently, after they've had this pullback, I thought it might be a good time to enter. So they've bought a 50% share in the Challenger mine, which was previously owned by Kingsgate, and then they've only done that in the last 6 to 9 months. And they've got a joint venture there with Pybar, who are a specialist underground mining contractor. Diversified Minerals, they've called themselves here as the holding company, I think. So Challenger has had its problems, but I think it's probably, with the rising gold price, that's probably going to prove to be a pretty savvy investment in the next 2 or 3 years. Still yet to see some full production data from this quarter, but they'll have to release that in the next week or two. So I think they're thinking of producing around 50,000 ounces a year from Challenger, of which they'll get 25,000 ounces. So if they can keep all in costs there to below, say 1250, 1300 Australian dollars, they're unhedged at this point. So they're going to be making $400, $500 margins there. That's decent production for a small company of a market cap about 35 million, I think, is WPG. They've got a 650 kiloton per annum processing plant there. There's a few other small explorers nearby needing a processing plant that aren't going to have the tonnages for their own, so they're going to have to use Challenger. And WPG themselves have got this Tarcoola project, which is a relatively high grade project, about 50 to 100 kilometers from Challenger, next to a rail line. I think one of the things they learned with their iron ore projects is the importance of infrastructure. It's not as important in gold, given that it's not as high tonnage and it's not that bulk commodity type business. But that's why they were a bit savvy with these investments. So Tarcoola, I think that they're going to try and produce 20,000 ounces. It's 100% owned by WPG, and they'll presumably negotiate with their partner to produce that through Challenger. So that's here this is an earlier heap leach study they'd looked at for Tarcoola, but now that was before they had acquired Challenger. So you can see here they're going to redo that study, and I think some of the figures here, particularly the capex for the project, 16.7 million, that's going to come way down, because there's really not a lot they need to do to process if they're going to do that through Challenger. So you might see the capex go back down to under $10 million quite easily, and that's really good production. So they could be producing 40,000 ounces maybe next year from their infrastructure. So it's really a little bit of a bet on the management credibility, that they can produce those ounces relatively cheaply. But given their past experience with their iron ore assets, I mean, they sold those at the top of the market for $300 million. And funnily enough, OneSteel has written those assets off. Arium, they're worthless effectively now. So that proved to be a really savvy investment, divestment in that case. The other thing is they've got this Tunkilla Gold project, which is a really quite a low grade resource, but it is a JORC resource, and I think it's over 500,000 ounces. So you can see here 558,000 ounces at about 1.4 grams a ton. A lot of measured and indicated resources as well. So that's not a bad project. And I think they've said here, that it really needs the gold price to move higher for that project to have maybe some decent economics, but still not far from the rail line. Um, that gives them optionality as well. But if they can get those funds start coming in from Challenger and Tarcoola, and then that potentially gives them scope to expand that resource or look at other opportunities. So I think they've got some really good optionality for a small gold producer. They're a little bit under the radar, and most importantly, they've got that proven management. Um, Another thing is that I read the Adelaide Advertiser. They're often WPG seem to be very good at promoting themselves in the local sort of papers, I guess. Often that's not a good sign, but in their case, I think I think that might have been how I first heard about the stock 5 or 6 years ago. Um, but yeah, their management's quite good at promoting themselves. So it's just a matter of whether that promotion starts to prove itself with good numbers from Challenger. But I think it will, um, and that's why I'm prepared to buy the stock here. From there, who knows where it goes? But I think you want to own good companies with good optionality to a rising Australian dollar gold price, and WPG fits that bill.